What's going on, traders? Today we're going to go over today's trading session. We are currently looking at ES. The time frame we are looking at is the 2000 tick chart, and the only supportive indicator I use is the 21 EMA, which is this purple line that oscillates in between these candles. And other than that, I solely rely on price action to look for high probability setups. Now, the first thing I like to do during the pre-market session is to identify the pre-market highs and the lows, which are these two purple lines. Now, these key levels have importance because once price reaches it, we can look at the reaction. Like as you can see, this resistance had a double top here and we rejected. Now, we can also use it as an indicator if price is going to break out of a range and have a continuation. For instance, if we broke above this resistance turned into a support and we started trending higher, this indicates that this failed breakout succeeded and we are transitioning to a new market cycle, which would be a bullish imbalance or just a bullish trend. But for this example and for today's market review, we are currently still within this range. As you can see, price is contained between the resistance and the support, and price is slowly but surely bouncing from one side to the other. So during this, what we're just going to focus on is the short end trends. Now, starting at the bell open, we had a downtrend that resulted in a break in a new low. But I initially had it drawn wider. I had it drawn almost like this because it did look like a seamless leg down. I also used the 5000 tick chart and it looked like one clean trend working lower. And if you measure it from this first leg down, because the market moves in pairs, and we place it here, and let me get rid of this so you guys can see, this second leg exceeded the first. So when I saw that, I did draw it wider, but price quickly reversed higher, and I also expected price to reach this support because we had a break, a new high, we touched the resistance. So I'm anticipating price to reach the support, but instead price pushed higher, and once I saw that, I counted it as a break and a new low, and now I'm focusing on the next market trend. Now, if we zoom out, it does sort of look like an imbalance, meaning once price is trending higher and it's not reaching the opposite key level, here we touch the resistance, we failed to touch the support, and we ended up going higher. This is when your bias slowly starts shifting towards more of a bullish bias. But once I saw a break and a new high and price rejecting, this indicated that we are still within range rules. But while I was looking at this before, mentioning this in hindsight, I was focusing on taking a long trade because this uptrend still needs a new high. So I was looking for a second entry long using the counting technique. We had a first entry long, pullback. This was actually the second entry long, and this is a double trap. This is an ultimate setup, but the only issue is it is a double trap and it's also a double bar entry. Now, you want the double bar entries to have some bullish, significance to it and to at least close above the EMA. This was a pretty strong or a pretty solid close below the EMA. If you took it, I see why. I personally didn't like it. I like more of, a stronger close or just more of some slight bullish, you know, tail, maybe closing a little bit above, but this closed, drastically below the EMA. So I ended up skipping it. We had a break, we had a new high. We double topped at the resistance. So what are we anticipating now? We're anticipating price to work lower and to touch the support, right? Because we are following range rules. So now we're focusing on this downtrend. Now, this downtrend didn't make a new low, and I was focusing on looking for a short entry, and this area got a little confusing because if you measure with the Fibonacci, if you get a little confused and you see price, break higher and at least retrace around the 50-60%, sometimes we like to invalidate it. We usually like to follow the bigger patterns because they take precedence. But in this situation, it was a little confusing. So what you want to do is respect the correction, right? And see what price does. Now, I was just waiting to see if this uptrend is going to have a break and a new high. And if we pushed below EMA strongly, I was looking for a short setup. Now, unfortunately, we didn't have any. We ended up pushing, we ended up making an attempt to make a new high for this uptrend, and now we're expecting to get a low for this, or a new low for this downtrend. I was looking for a higher low right around this area here, but we did not get it. Somewhere around here I was looking for excuse me, a lower high, but we never had it. We ended up just pushing and making a new low. Now, once we made a new low and we're around the support, we're waiting for a strong push, right? That can tell us, okay, the sellers are out and now market's going to reverse, especially because we're in a range and we're following range rules. And we're going to anticipate for price to reach the resistance because it's been doing that throughout this trading session. But, and this happens, and this is why the key levels are important to draw and to understand. We ended up kind of consolidating, as you can see. And let me make this a little bit more solid just so you guys can see. I like the color purple because we're always at war, when we're trading. Okay, that was a little corny dad joke. But we are consolidating here. So what we're waiting for is for a stronger push because we had a break in the new low. We still haven't really had a significant move lower, so there's not much to trade here. We're kind of going sideways. EMA's in the middle of everything. So we're waiting for the next market cycle, whether we push up and we're gonna continue trading in this healthy trading range, or the market might turn into another market cycle, which it did here. We had a significant leg down, very strong. So now we're going to forget about this range. We're going to focus on looking to take a short position. And look how much it pushed and retraced below this range. It pushed, over, and if we could measure it real quick, around 30 points from the starting point. So, and this is a nice seamless leg, so we can easily look for a short position to take. Now, we always count from the recent low and we look for second entries, right? And we only had a first entry. We had a new low, first entry long, first entry short. This was the first candle that triggered lower than the previous one, and we ended up making a break, having a break in a new low. Now, usually when it's a strong seamless leg like this, you don't want to right away jump to looking for a reversal pattern and taking a long. You want to see that the buyers are in, that they have the momentum, and that, we're not going to test this low anymore. So just wait for a nice strong continuation, a nice trend, something that shows you, okay, the bulls are back in business. And as you can see here, we had a nice, little spike up. If you guys drew it tighter, it doesn't really fit. And especially when you're anticipating a reversal, you can widen it a little bit, which I did. If we ended up pushing a little, you know, above this trend, then we can look to count it as overshoot, meaning it's oversold, but I drew it a little wider. And I was waiting for a second entry long because downtrend played out, right? And now we're anticipating for the market to continue onto the next market phase, which is this bullish uptrend, right? It was a decent uptrend. So we're just gonna wait for this correction to play out. And you always want to wait for the bearish correction to play out before looking for a long because you don't want to get trapped. So counting from this high using the counting technique, we have a new high, first entry long, pullback, second entry long. We also made a new low for this downtrend. Now this did form below the EMA, right? But once I saw the second bar, I did take a bit of a chance just because I liked how it closed. It was a strong, solid bar. Downtrend played out. We need an uptrend that needs we have an uptrend that needs a new high. Where, above the EMA fairly throughout this whole consolidation. So I was looking to take a long position, and I did. It wasn't too big of an entry. It was about 2.5 points. So the stop loss was, not too big, not that high of a risk, and I ended up riding it for about 3 points for a winning trade. Now we ended up pushing higher, right? We anticipated a reversal, and this if you miss this trade, this is an area where you can look and capitalize on a long opportunity. Now, a lot of you guys might have thought to draw it like this. It makes sense, and I see why you did it, but there's too much gap here. There's not really, it's not aligning geometrically with the market structure. So I like drawing it a little tighter, which I did here. As you can see, it fits great, nice and tight, aligns with the EMA. And now we are looking to take a long setup, right? So counting from this high, and you have to respect the shortened correction, we have a new high and we only have a first entry long, right? We need at least a second entry long to take a setup, and unfortunately we didn't have it. We ended up breaking and making a new high. And when I say breaking, meaning this uptrend is still live, right? You can take trades within it, long trades, as long as they set up at the EMA. But once you have a break of a trend and it pushes and makes a new high, this is when you forget about longs for the time being and you wait and see what the market's going to do. Either we have a continuation, reversal, or consolidation. So over here, we're just going to wait and see what the market's going to do. We ended up having a strong push down and a break and a new low, right? So I wanted to see what the market was going to do. Are we going to push higher, especially after such a strong, significant push around 50 points? And we ended up chopping up here in this area, some congestion. And this is about 20 minutes before the market close. And usually I like to avoid trading in this time due to volatility, right? So I ended up not really trading here and we called it a day. So I only had my one setup for the day. It was a little bit of an aggressive setup, but it made sense, especially because this downtrend had a clear break, a new low, strong spike up. We're anticipating a reversal. This uptrend needs a new high, and we waited for this bearish correction to play out. Nice double bar entry. If you skipped it, like I said, this is more of like a more experienced level trader, but if you did take it and you did take the chance, it definitely was worth it. Um, and it's always about context, guys. It's not every second entry long or every long opportunity that you take. It needs to, you need to have, I would say, at least um, two contexts or two things that align. So, for instance, here the downtrend played out, uptrend needed a new high, clear break, especially when it's a broad price action followed by a break and a new low. This gives you the confidence that the sellers are out. Nice strong bar, right? Closing above the EMA. And as you can see throughout this whole consolidation, the bulls are not even letting the market go below the EMA. You know, the EMA is, I always say, it's like a compass and it guides you and it lets you know what's going on. And, we have a very strong support. You could even draw a small support here showing that, okay, the Bears can't drive it any lower. They failed twice. And this second entry was a nice winning trade, especially if you held it for a runner. I didn't. I just took the scalp and waited for the next trade. So that was it for today. A little confusing price action in the beginning. You just had to respect the range rules. And as I mentioned earlier, always have the key levels drawn out, which are these two pink lines, and respect them. And once you see a price break out of it, this level starts, for instance, this support turns into a resistance, strong break below it, nice clean seamless leg. You can look for, a short setup. Once that plays out and you have a strong push higher, this usually indicates a reversal is occurring and you can, capitalize on long opportunities. So that's all, guys. I'll see you guys in the next video. Take care.